Hello everyone, I'm Dr. Stock. Today I would like to talk to you about 3 different stocks in the stock market that I think all have some interesting upside coming up in their near futures, or at least some buying opportunities presented to us. So I wanted to show you those charts. I want to talk to you about what I see for those companies. For right now, let's get ready to rock. Welcome back. For those of you who are interested, down in the description is a link to my Patreon. By coming over to the Patreon, you get access to my portfolios. I have a growth portfolio and a dividend portfolio available so that you can see the stocks that I'm invested in. I also put out a weekly newsletter and an accompanying weekly watch list of stocks where you can go and check out the stocks that I'm interested in for the week. And also, patrons are able to add to that list as well. So whatever stocks the entire Patreon is interested in, we can look at, we can talk about, and we can just see what we all think, and we can also bring in our own research and our own due diligence and really pull it all together and see what follows from there. So that link for the Patreon is down in the description. I would love to see you over there. Also down in the description, you'll find a link for WEBULL. By signing up and depositing $100, you get 2 free stocks. I get 2 free stocks for the referral. Thank you guys for any support that you show. Even if it's just watching these videos, I really appreciate it. If you haven't subscribed and you'd like to, go ahead and hit the subscribe button, hit the notification bell, hit the like button, share it with your friends. Let's get on to the stocks. Alright, the first stock that I have for you is Nokia, and Nokia had some wonderful earnings come out where they just smashed their expectations recently, and so that's why we see that huge gap up that we see. And yesterday was not a strong day in the market, so even though we still may have had a red candle, I think that we had a much lower close yesterday because of just how the market bias was. Today, also not a strong day in the market, but we still see a significant gap up from a stock that really otherwise is, well, we can see the short squeeze that we had back in January, but otherwise this stock stays pretty boring. So this gap up here on significant actual news about the company is significant, and it's something that I think you should watch for buying opportunities down the road. I think it's a 5G play that's really going to catch people by surprise. The network slicing that they offer, and it's an AI-driven network slicing where they take the 5G signal and then they split it into different frequencies, and then they can sell part to consumers, they can sell part out to businesses and industry, and you can go to their site, you can read all about it. If you look up network slicing, you can find out more, and I think that Nokia is really going to surprise people with that technology moving forward. So this is one I think is worth at least reading about and looking for those buying opportunities if you don't already have a position. And if it comes back down, if it settles back down somewhere in this range, in that gap that we have, that no man's land, it's a place where I would consider adding a few more shares than the position that I already have. The next company is NIO, and I wanted to bring it to your attention just because I have the EMA up here. It's the 200 EMA, so this is the daily chart that we're looking at, so it's a 200-day period. And then also I have the 50-day simple moving average up here, and check out how the price action is just bumping up against that for resistance. You can see the 200 EMA, every time that we dip below that 200 EMA, we rebound. So we kind of get trapped in between, and the two of them are narrowing with each other. So I don't know for how much longer we're going to see this trend continue, that we keep getting these lower lows. But you can see even when we peaked up above the 50-period moving average, we still ended up coming right back down in these last 3 days. I mean, just almost perfectly touch that value. And in the Patreon today, I was saying, we need to break the 41.23-ish mark if we're going to really see more price action coming out of NIO. And I just don't think that the market bias was right for it today in order for us to just push past it. You can see it went right up to it and then came right back down. Even if you look at it from the day before, from about where we would top out, still that's 41.38, so we're just getting stuck in between these two moving averages. So what we want to watch is for that to break upward or downward, hopefully. And with NIO, it's a company that I'm very bullish on. I believe that this is one that's going to end up breaking that 50-period moving average eventually, or hopefully to turn things back around, so that way we get positive slopes on both of those and that we're trading above both of those, so that this line stops acting as such hard resistance for us moving forward. So for NIO had great numbers considering there was the semi shortage, and also they're anticipated to have a very strong 2022 as per Deutsche Bank. So if NIO is a company that you like, you could look at this sort of as an investing opportunity that you would have here anywhere in the mid-30s range, I would say. if we take this all the way down to the 200 EMA, we can actually see it in purple over here, 36. I'd say if we come down and tag that line again, that would be a place where we could find an entry if we were looking for one. And certainly seeing this break above the 50-period moving average, or even if you want to treat it as a sell line, if this is a short-term play for you, this could be something that you could do moving forward with NIO. For me, I think that right now, with EVs and growth stocks and semi-shortages, I think that it's going to create a lot of buying opportunities for us for EV companies like NIO moving forward. So just keep your eye on this one. If you're invested in it, stick with it. You're doing a great job, and I think that this is really going to pan out for us over the long term. All right, and the last company that I want to talk about is DraftKings, ticker symbol DKNG, and it's one that I've had on here before. And if you look at the earlier history of this, back from this low that I had at 44.10 all the way back on January the 5th, ever since then, the 50-period moving average, and this is again the daily chart that we're looking at, it's been acting as a really decent line of support for us, where if we tagged under it, it was just momentary, and then we were back up above it, and then all the way up until March the 29th, and then once we crossed below it, it became a line of resistance for us, and we had just a few days rally, and then, well, since then we failed to really beat that out. So right now we closed today at $56.66, and next Friday, I believe it's before market open, so that's May the 7th, DraftKings is set to report their earnings. And recently it got two different price targets assigned to it. One would be $75 for the 12-month price target, and the other one would be $81 for the 12 months price target. So from this price right now at $56.66, even if we called it $60, $20 up from there, which is essentially what we have, is a 33% increase in price from where it's at right now. And the other price target that we got is $81, and that one would put us about 40% up from where it's at now, so between 30 and 40% upside over the next 12 months from its current price. So if you're looking for a buying opportunity, it's not treating the 200 EMA like support yet. It could treat it that way in the future. For right now, it could be following some other lines of support that it has right here, where we have this inflection between where we were concave up to concave down. When we have these candles here, yeah, we tagged below, but even so, when you look at it, those low to mid 50s seem to be about where this thing drops if it's going to drop in those lower prices. So right now, I would say that we're at the high end of the lower prices that we're looking for, and we could watch it come back up and get at least close to this resistance that we have here at about $62 per share, according to the 50-period EMA, or the 50-period simple moving average that we have here in front of us. Something that you should be aware of when you're looking at DraftKings, let me show you from one of the websites that collects their earnings. So what I wanted to show you is that this is from NASDAQ.com, and this is the DraftKings earnings, and check out their estimated, which is the dark blue, versus the reported earnings per share that they have, which is in the light blue. And you can see all these being opening downward. These are all negative earnings per share, so they're not yet profitable, but they're making the right movements from the third quarter of 2020 to the fourth quarter of 2020. And so when you look at the estimates, even the estimates are going in the right direction. So this one shows that they're losing less, which is a good thing. That's a sign of growth that we have taking place. And as they continue to lose less, we get growth in the company. And these reports, if you look at the reports, every report that has come out of all four of the reports that are here since DraftKings became a publicly traded company, every one of them is worse. They have yet to beat the earnings according to this chart that we see here. So if we look at that, maybe we can anticipate a loss of 60 cents per share versus this 50 cents per share that's currently estimated according to NASDAQ.com like we have here. Maybe this is a time that we actually get a beat on earnings. I don't know about that. DraftKings does have a history of spending a lot of money on advertising. They would like to come out on top as being known for sports betting and also esports, online gaming within their app as well. So when you look at DraftKings and you see these earnings, there's a lot that gets in the way of their earnings because of the amount that they spend on advertisement so that they can come out on top of the online sports betting and the online gaming market. So let me summarize. Nokia, I think that they're going to be a really strong player in 5G. I think that they're going to surprise people by coming back out and really making a name for themselves going forward. kind of leaving some of that old cell phone side of them behind a little bit and really stepping forward and really making a powerful impact into the market. So I'll keep your eyes on Nokia. If you don't have a position, it's a company I think that you should read more about and decide if whether or not you should take a position. It's one that I'm excited about, and I think that they have a bright future ahead of them in the 5G space. NIO just keeps on hitting that 50-period simple moving average and on the daily chart and coming right back down, and it is staying above the 200-period exponential moving average, the EMA. So on the daily chart again is what we're talking about, and so that's acting sort of as a line of support for us, that we're not really dropping below that, we're actually staying above it. So what we want to see is to break above that 50-period simple moving average that we have on the daily chart for NIO going forward. Really just examining it for buying opportunities. All the company news has been positive so far. 2022, according to Deutsche Bank, is supposed to be a really strong year for NIO coming up. So 2021 is supposed to be a little bit neutral. Some people are much more bullish on 2021 itself. For me, for NIO, for the long term, I really think that they were going to exercise their leadership and really show why they've taken that position in the first place. Finally, DraftKings. I really like the price revisions that have come out, $75, $81, and I also like that they do spend as much as they do on marketing, so that way they can make sure that they are the face of online sports betting and that they are also very much associated with online gaming. So that's what I have for you today. If you guys want to check out my Patreon or sign up for WEBULL, both of those links are down in the description. Go ahead and check them out. I really appreciate it. If you haven't already subscribed and you'd like to, go ahead and subscribe, hit the notification bell, hit the like button, share it with your friends. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.